Hello traders, welcome to another lecture. Today we're going to be talking about Fibonacci, the Fibonacci trading tool. I want to believe you must have heard about Fibonacci, must have seen one or two documents or one or two lectures on Fibonacci, but this is just going to be another classic lecture that will really help you in your trading journey. And Fibonacci is one of those tools that you are really going to need in your box of arsenals as you move forward. So let's go straight into the subject matter, Fibonacci. So Fibonacci is one of those tools on our MetaTrader. Okay, it's also a kind of indicator. Yeah, it's an indicator in a way. Yeah, so now I'm going to talk about how it came to be and how it is being applied in trading. So now let's begin with some definition and a little background. Okay, Fibonacci trading tool comes from the nickname of a famous mathematician called Leonardo Pisano, mostly referred to as the son of Bonacci. That is the guy, the Fibonacci guy, the guy that will make you some good dollars in this industry if you know how to apply the tool that came from his discovery. He came up with a number sequence of which if you add two numbers, it gives you the next number of the sequence. For instance, 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55. So the sequence goes on and on. So now if you keep adding, the two previous numbers of the sequence to give you the next number. Just like this. You say 0 plus 1 equals to 1, 1 plus 1 equals to 2, 1 plus 2 equals to 3, 3 plus 2 plus 3 equals to 5. Then the next one, if you say 3 plus 5 is going to be equals to 8, and so forth. Keep going. It's a sequence, an endless sequence. His theory is that everything in nature can be explained by the Fibonacci sequence, which is a sacred geometrical pattern. You must have seen something like this before. Something like this. Yeah, this diagram. Okay, so he's saying that if you take the squares of a number, perfect square, and put them together, that's those numbers in this Fibonacci sequence. If you put them together, there's where you can plot, a spiral diagram out of that. Those of us who are science students who did technical courses, classes, should be very familiar with this concept. So now, how does it affect us as forex traders? We're not mathematicians. Well, in a way we're mathematicians, but not from that perspective, not from that angle this time around. Okay, we're talking about how it affects us, how we can use this information in forex trading. So now this how it affects us as forex traders. Okay, now when a number from the sequence is divided by the preceding number, we get a range of value between 0.5 to 0.618. Okay, it's actually between 1.5 to 1.618. Okay, you get that range. So this number is called the golden ratio. Now what do I mean? If you divide 3 by 2 in the sequence, it gives you something in the range of 1.5. Just try it out. Take a calculator and punch the numbers. If you divide 8 by 5, it will give you between 1.6, and if you divide 13 by 8, it will give you around 1.6 also. So if you keep doing the division between these numbers, if you take a number and divide it by the previous number in the sequence, it will give you that ratio. So in the forex markets, we call that ratio the golden ratio. So that's how it applies to forex trading. Okay, so as we go forward, I'll be show you in charts how those values, you know, come to play, and how you can also apply them in your trading. Okay, so now this is what you have. Okay, now Fibonacci ratios are actually hidden potential levels of support and resistance. All right, so by the time I pull out the tool and I draw it for you, you see that those levels are like support and resistance. They're actually horizontal areas also. Okay, you know, in our previous video we spoke about support and resistance, which you say support and resistance are horizontal lines. We talk about trend lines, which you say trend lines are diagonal lines. And then here in this lecture, talking about Fibonacci. Alright, Fibonacci are also horizontal lines. Okay, so there's a way you can use them as support and resistance. Okay, it's all about the application. Okay, so when price move from point A to point B, okay, it always come down, it always try to retrace before moving forward. Like I mentioned in our previous class, that price don't move in a straight line, it moves in a zigzag format. Okay, going upward, it moves in waves, going either upward, downward, or sideways, but it moves in waves. So we use our Fibonacci tool to determine the extent of how far price can go. So now these are the levels you see in the tool when you pull it out. Okay, we call them retracement levels. Okay, call them retracement level. We have the 38.2%, 50%, 61.8%, and 78.6%. Okay, so by the time we go into the charts, you'll be able to see how this tool is being applied. So all these are just, you know, just a background, you know, just a little definition of terms, so that, you know, you can have, but there's still a lot to know about Fibonacci. There's a whole book out there on Fibonacci, but I just extracted this, you know, just to give you a little background of how the tool came about, so that you don't have some holes in your understanding. So now we're going to go into the charts and see how we can apply Fibonacci to trading. So guys, we are going to be starting with the pounds USD. The pounds USD is one of my favorite charts, you know, my very favorite chart. So let's go into, we'll go to the daily charts, and then we'll see how we can apply the Fibonacci tool. So now the Fibonacci tool is somewhere, if you go to this trading view, rising trading view, for all this for the lecture. So this by the left here is your toolbars. Okay, now I'm going to be doing a special video on how to master the trading view interface. Okay, but for now I'll just show you what concerns us in trading view, and that is this tool here. Okay, can you see this little arrow here? Where when you click on this little arrow, it brings out a lot of options here. Okay, so we have the Fibonacci retracement. Okay, so this is the tool here. I already started it. Okay, so now there's something I didn't mention earlier. When it comes to Fibonacci, there are two things about Fibonacci. Two things are involved. Number one, we have Fibonacci retracement, and then number two, we have Fibonacci extensions. Okay, so Fibonacci retracement. Okay, when there's an impulse in the market, like I mentioned earlier, the price moves in a wave. Okay, when price goes up, it takes a breathing, and then moves up and moves higher. Okay, it retraces and then goes back in the same trend direction. Okay, so now this is the tool here called Fibonacci retracement, and then we have the second one, Fibonacci extension. Okay, so now I'm going to begin with Fibonacci retracement. Okay, so now this is what the tool looks like for those of us who are not familiar with the tools, and then it has some You can see it has some ratios. Can you see these numbers around it? These are the ratios. Okay, so now let's talk a little bit about the trend. Okay, now like I said, trend moves in a wave. Okay, it goes up, down, up, down, up, down, up, down. Now I need to go and find my video on market structure. Okay, now because market structure and Fibonacci kind of work hand in hand. Alright, so for you to get a very good understanding of Fibonacci, you have to have a very good knowledge on market structure, how market moves from point A to point B. Okay, so now when the market moves, okay, for instance, this is point A, this is point A. Let me take this point, this starting point here. Let me make this bigger. And then we'll have this point here. Point B. Point C. And then we have here. Call this point D. So this is just annotation for illustration purposes. So now the market move, this wave went up, came down. So now let's talk about just this wave, this movement here. Okay, now the market, this is the pulse, this is the impulse, the retracement, and then another impulse. Then we have another retracement, we have another impulse, we have a retracement, we have another impulse. Okay, so impulse, this is an impulse, and then we have the retracements, and then we have the retracements. That's this here. Okay, yeah, let me do this with the retracement. So in between point B and C, you have a retracement. Okay, like I mentioned earlier, market move in a wave. Okay, now this is a bearish trend coming down, up, down, no. So this is how the market moves. Okay, it takes impulse, impulse, and another impulse. So the market doesn't, like I said, doesn't move in a straight line for too long. When it goes in a particular direction, it retraces some step back before continuing in the original direction. So now this is what we have. We have an impulse and a retracement here. So like I said, Fibonacci is about two things. Number one, Fibonacci retracement. Number two, Fibonacci extensions. Okay, so now price have moved. Let's consider the impulse AB. All right, consider the impulse AB. Okay, AB is an impulse, and then BC is retracement. So now what we want to do is this. We want to know how the market is going to move from one point to the other. Like I mentioned some time back, that we always do what we call top-down analysis. Know your time frame, know yourself, know your personality, know your strategy. Okay, so now I'll pull out our Fibonacci tool now. We'll start with Fibonacci retracement. Okay, from point A to point B. So we have many ratios. We have many ratios here, but across board in these markets, okay, there are only about, I think, 4 ratios that we're actually concerned about. So when you click on this, when you click on the tool, it will bring us all the ratios that if you want to edit, you can edit, but I always advise you to leave the setting in default setting. Okay, so these are the most critical levels for Fibonacci. We have 1, we have 0.83, we have 0.618, we have the 0.5 and 0.78. So those are the most critical level that you use. Okay, but now like I said, it depends on the mentor you are using, or the mentor you are following. Okay, that will inform you the level you should stick with. Okay, I don't advise you to stick to, I don't advise you to use more than one level. Okay, now pick a particular level you want to use. Okay, and then stick with that level. This is the mistake many people make with Fibonacci trading tool. They want to trade every level on the Fibonacci tool. No, you don't trade every level. Now you pick a particular level and stick with that level all through. You master that level. Okay, if you want to stick with the 38% level, you stick with it. If you want to stick with the 78%, you stick with that. If you want to use the 0.5 or the 0.618, you do that. Okay, but for me, my own strategy entails that I stick to the 0.5 and 0.618 level. Those are the 2 levels I use for trading. Okay, so now, not to digress too much, okay, now you come and pick your tool. Now I will drag from point A to point B. Now this is point B here. Okay, so and I'll extend it out a little bit. Okay, now this is what I need to see. Okay, let me take out this annotation, is impulse. Now if you look closely, you see 0.382. Now you can see price came after the impulse. Okay, after the impulse, price retraced back to this level before an extension, before going downwards. Okay, so now at this level, if you are sticking to 0.83, okay, when price gets to this level, you're expecting another impulse after this short retracement between B and C. Okay, then you should expect a push to D. So going forward, we'll be talking about Fibonacci retracement. Fibonacci extensions. Okay, so now let's focus on Fibonacci retracement. So now price came from point A to B, and then pull back to C. Okay, and then pull back to C before going in the direction of the trend. Okay, so now we take this out. Now let's take another one. Now I'll take another pull from C to point D. Okay, this is another that's 0.38. You can see. So let me highlight the area. This is it here. Okay, so like I said, I don't like using levels. Okay, most people like to stick to levels. All right, they just draw a line and then that's what they use for their strategy. But I like to use an area because, like I said, the market have its mind of its own. It may not exactly give you a textbook bounce on a particular level. Sometimes it will just come to that level, play. So that area where price likes to play, what I do is to just draw an area, a box to cover that area, and then so Now when price comes to that area, I'm expecting a retracement, then I just, you know, apply my strategy, then go in and then collect some pips, of course. So going forward, now I'm going to take this out, okay, and then I can pull back, I can pull another level from here, this impulse again, to the end of the impulse, which is here. Maybe I'll probably call it point F. Okay, so now this is what I want you to see. Okay, now if you look at this, okay, this was a recent trade for me about, I think about 2-3 weeks ago. I took this trade here. Okay, so now what do we have here? Let me pull this out a little bit. Aha. So now this is the area where price, this is the impulse here. This is the impulse I want you to look at very well. Okay, from this high here to this high, to this low here, to this low here, and then back here, and then price came down here. Okay, so now this is the move I want you to pay attention to. Okay, now price came to this area here. You can see the 0.51 and the 0.618. So now for me, in my trading strategy, okay, the area I focus on is between the 0.5 and 0.618. Now I actually select that area. I call that area my kill zone. Okay, now I try to ignore I ignore the 0.7, the 0.38. If I see a trade there, I don't take it because it's not part of my strategy. If I see price pull back to the 0.7, I don't take it. If it pulls to 0.23, I don't take it. Okay, now I'm only interested in the retracement when it gets to between 0.5 and 0.618. Like I said, look guys, you cannot trade everything. You cannot trade all the levels. You have to select the levels you're interested in. Okay, pick one level and just stick with it. Okay, let's just be with you. Okay, now the thing is that, look, I'm a minimalist when it comes to trading. Okay, I like to keep my things very simple and very clean. All right, I try to take out all forms of confusion. All right, so what I do is that I just select that zone. Okay, between the 0.5. Let me pull out the line here. This is the 0.5 area. The 5 line, sorry, 0.5 line, okay, and then in between the 0.618. Now I'm going to remove the tool. Okay, so now this is the area. Okay, so you can see price came here, played a little, and then continued. Price started from here. This impulse went up, the retracement, and then another impulse. Okay, so now trading with the trend, I'll be looking to enter the trade between, let me call this place, let me call this point X and point Y. So I'll be looking to enter the market between. So when I see this, when I see the reaction in this zone, I know that okay, my bias should be bearish. I should be selling all the way down. So now this is what we have from here to here, about 600 pips. The next impulse after this point here, let me tag here, let me call this point E. Okay, so now this is what this is much about Fibonacci retracements. Okay, so when you see an impulse, okay, expect the retracements. Now that's what the tool helps you to do, is to measure the retracements. Okay, so now like I said, you cannot use, you shouldn't use every level on that tool. Okay, like I myself focus on just the 0.5 to 0.61 area. Okay, so I just highlight that area, and then when price comes to that area, place in that area, I know that okay, the tides, the waves are aligning for me, and then I started looking for setups in that direction. Okay, so now let's look at another chart. Let's see what another chart. We'll return to this chart. Okay, so we'll talk about extension, but for now we're dealing with Fibonacci retracements. So I'll pick another chart. Let me see. Also, I love to trade the pound JPY. So now this is the pound JPY. Okay, so now let me take this off. From here. So now this is an impulse move. Okay, this is an impulse to the upside. Okay, now I'll take my tool from here to the impulse, and please, like I said, always use the wick. Okay, use the tip of the wick. This is the tip of the wick. That's the body. If you like now, this is the at this point here, at the bottom here, price actually, the wick and the body actually coincides here. So you pick from the wick of the last candle to the first candle, or the first candle to the last candle of the particular impulse you are considering, and then you look at this. Okay, so now you can see this is also another area. Okay, between the 0.5 to 0.6. okay, now that's where the place it gets interesting. Okay, that's where it gets interesting. You can see that price have started reacting in this area here, but so we are expecting, you know, a move to the upside. Okay, we're expecting a push to the upside, and so from this area, so I'll be expecting a push to the upside, and then I go in, find my setups, and then, you know, of course, collect some pips. Okay, so let me play this out. So you can see price is moving. So from that point, I start looking for bullish buyers, so bullish setups, right until then we have that. Okay, so now that's how this thing plays out. I always like to target the 0.5 to 0.618 level in my trading. Okay, so now let's look for another example. This, of course, this is the daily chart. The daily chart is for direction for me. I've mentioned this in my previous videos. Okay, so let's see AUD. Let me see, I think ADCHF. Okay, now, okay, this is a recent trade I'm actually looking at. I'm actually looking at this trade right now. Okay, this is what I'm actually looking at. This trade actually made some good profits on this retracement. Now this is what I'm looking at recently. Okay, now this is point A for me, and then this is point B. Okay, so now we've gotten an impulse here in the market. We've gotten an impulse here. Okay, from this point to this point here, we've gotten an impulse. Between point A and point B. So now I'm looking for point C. I'm expecting price after, of course, like I said, after every impulse, okay, expect a retracement. That's how the market. So this is cast in stone. Alright, this is cast in stone. This is how the market behaves. It's the market behavior. Anytime there's an impulse, expect a retracement. So now, this is how it played out for me. Okay, this is how it played out for me. I took my tool from point A to point B. Okay, so now my kill zone is around here, between 0.5 to 0.6, which is the golden ratio. Okay, now this is what happened. Okay, so now immediately price did a turn here. Immediately price did a turn at this point. So when I saw this candle here, okay, so I'll also be talking about candle patterns. I'll be talking about candle patterns as we go forward, as we move forward. All right. So now, this happened here. Okay. When I saw this, I said, okay, I should be expecting a retracement. So I pulled my Fibonacci tool from point A to point B. So now, I was expecting price to do this. After this impulse from point A to point B, I was expecting it to come to. I'm actually expecting it now to come to my 0.5 before taking a move to the downside before continuing in the intended direction. But like I said, I predict the market, but I always remain reactive. I always remain reactive. I'm always reactive to the market. Okay, the market will tell me how to move and where to go. So this is what I'm expecting. So I'm actually expecting the market to come to point C, somewhere around here. Okay, before taking a dive. Now so I took this trade some days back. Okay, this is what I did. Okay, so now when I saw that turn around at point B, okay, when I saw that turn around at point B, I came down. All right, came down. So now from this impulse area here, so I came and took I drew my Fibonacci, and then you can see another area here. So now let me just give you a little hint on how I took this trade. Okay, so now I was expecting price to move from point B to point C. Here. Okay, so now when I came and saw this, all right, I spoke about support and resistance some time back. So now, like I said, a strategy is a combination of many elements. Okay, now I actually used two things for this entry. Okay, I used Fibonacci, I used Fibonacci, I used support and resistance. Okay, so let me just walk you through how I took this trade. Now so when I saw this turn on the daily time frame, like I said, my daily time frame is for directional purpose, and then it's my smaller time frame for my 2 hours going downwards. Okay, and for my entries. So I pulled out my Fibonacci tool, and then I saw this here. Okay, at this Fibo level. Let me call this place, like I said, I always call it kill zone. Okay, so price came to this place here. When I saw price reacting here, I immediately placed a buy order, and then price moved up to started moving in my direction. So now I'm expecting price to come all the way to point C before going down. So though, like I mentioned some time back, okay, the trend is actually bearish as it is from the daily time frame. Okay, the trend is bearish because of this impulse. Okay, yeah, the price is actually retracing now. Price have been retracing for about 3 weeks. Okay, but the trend is bearish. Now this is where most people get it wrong. Okay, just because the price is turning doesn't mean that the trend is turning, is changing direction. All right, it may just be retracing for a while. So now on that retracement, I tried to pick some pips along the way, but my original bias for this trade, for this pair, is that it is bearish. Okay, for the long term. So I expect price to do this. Come here, and then keeps going down. But like I said, I remain reactive. Okay, no one knows the future. The best of us forex trader, all we do is just speculate. Okay, just speculate. But the smart ones will speculate and remain reactive. Okay, so now I'm expecting price to move all the way from point B to point C before going down to point D. If it ever does that, okay, guys, these things are, prediction, are just speculations. Price can do this from point B, break point C, come down, retest, and then move upward. But like I said, we remain reactive. But what I expect price to do is that I expect price to come from point B to point C before going downwards. Okay, but so Now, just from point B to point C, we are having about 250 pips. Okay, you can trade in between. You can trade in between and get something there, but you just have to know. That's why you have to understand these things. Okay, where the market is moving to, the direction of the market. So we pull out this. We pull out. So I pull out my Fibonacci and came to my kill zone. So let me take it back to the 2-hour time frame. Okay, now, so like I said, after this place, so there are two confluence here for me: support and resistance and Fibonacci. Okay, you can see that price came here, played here. Here price was support, support, support. It broke, came up, resistance, came down again, came up, resistance, came down. So price kept playing in this direction. So when it broke, when it finally broke and then came back here, and I took my Fibonacci tool, I saw this area here. I just placed my trade and then placed my stop loss somewhere around here. We'll talk about stop loss going forward, but for now, I'm talking about Fibonacci retracement. So I'm expecting the price to come all the way here. So I'm actually going to exit my trade around here, around this point here. I'll be taking my exit around here just before my kill zone on my daily time frame. So let's just look at one more example and then we call it, and then we'll be done for this pair. We'll be done for this pair. Okay. So like I said, I focus on just one zone, which is 0.5 zone to the 0.618 zone. So from here, let's see if we could pick another example. Let me see. I also love to trade. I love to trade the pound CHF. Let's check pound CHF. So we come down to the daily. Okay, so now this is a recent trade also for me. This is a recent trade that I'm actually looking to trade. I've been following this pair for a while now, and it is beginning to behave the way I expect it to behave. Alright, so now I pick my Fibonacci tool here from this point to this point. I pull it out. Okay, then I come to mark my zone. This is my zone. This is my zone, my kill zone. A kill zone. So now I'm expecting price to pull back, to pull all the way to this zone here. So from where price is now to going forward, I'll be expecting bullish retracements to this point here. So I will be looking for buy positions going forward for now in the interim, but generally this trend is bearish. Okay, so let me see another example. Like I said, I like to give many examples as possible. So guys, please hit the subscribe button, hit the notification bell. Okay, try to like this video so that YouTube can better publish this for other people to see. Okay, so now this is what is happening here. Okay, so when I saw this, I took my Fibonacci from here to here. Okay, so you can see price came just very shy of the zone a little bit before taking a plunge to the downside. Okay, so I think by now you should have gotten the general concept of Fibonacci retracement and how to apply the tool. Like I said, always use the tool. Take from the top of the wick, then you go down the impulse, look for the last candle and take the wick. Okay, use the wick, not the body of the candle. Okay, and then there's a very important thing I need to mention about Fibonacci retracement. Okay, you only use this tool in trending markets. Okay, you use this tool in trending markets. You don't want to use this tool in a ranging market. No, you are going to burn yourself, man. You are going to burn yourself. Use this tool in a trending market. Okay, so now let's move ahead. Okay, well, let's go to Fibonacci retracement, Fibonacci extensions.